Strive Inc., trading under the ticker ASST on the Nasdaq, is currently priced at $16.31 as of the market close on Friday, May 1, 2026. This reflects a significant intraday surge of 6.19% to end the week. As we look at the Monday morning pre-market environment for May 4, 2026, the sentiment surrounding this firm has reached a fever pitch. While most investors are distracted by the latest swings in Tesla stock or the sheer weight of Nvidia stock on the broader indices, Strive has quietly orchestrated one of the most aggressive corporate transformations in recent memory. The expectation from the casual observer is that this is just another boutique asset manager trying to find a niche in a crowded field dominated by giants like Fidelity and Schwab. However, the reality is far more complex and arguably more volatile. Strive is no longer just selling exchange-traded funds. It has effectively turned itself into a proxy for the digital asset market, specifically through a massive Bitcoin treasury strategy that now dictates its valuation far more than its fee-based revenue ever could. This gap between the public perception of Strive as a traditional investment house and its reality as a high-stakes capital allocator is where the real story lives. Most people look at the ticker and see a company that went through a reverse merger and is now struggling to regain the highs of its early listing days. But if you look at the internal mechanics, you see a management team that has spent the last month aggressively stacking sats, recently announcing the purchase of another 789 Bitcoin to bring their total holdings to nearly 14,560 coins. That is nearly $1 billion in digital assets sitting on the balance sheet of a company with a market cap that only recently crossed the billion-dollar threshold itself. This creates a fascinating leverage play. When you buy ASST, you aren't just getting exposure to their anti-ESG investment philosophy, you are essentially buying a leveraged Bitcoin ETF that also happens to have an operating business attached to it. The market reaction over the last 30 days has been a masterclass in momentum. April was a transformative month for the stock, with shares gaining roughly 77% in value. This move didn't happen in a vacuum. It was fueled by a series of institutional nods that most retail traders missed. Vanguard's Total Stock Market Index Fund recently built a $25 million stake, and we've seen high-conviction buy ratings from firms like TD Cowen and H.C. Wainwright, with price targets stretching as high as $36. When a stock is trading at $16 and a reputable analyst puts a $36 target on it, it forces a rethink of the entire valuation model. The common ground here is that Strive is a risky, small-cap financial services play. The contrarian take, which is gaining steam among institutional desks, is that Strive is actually undervalued because the market hasn't fully priced in the Bitcoin per share metric that leadership is now using as their primary North Star. Think about the traditional way we value companies like Fidelity Investments or Interactive Brokers. We look at assets under management, the stability of their mutual funds, and the growth of their brokerage accounts. If you apply that same logic to Strive, the numbers don't necessarily look great at first class. They reported a massive GAAP net loss for the end of 2025, largely due to the fair market value adjustment of their Bitcoin holdings. If you were just glancing at a screener, you'd see a company losing hundreds of millions of dollars and keep scrolling. But the reality is that nearly 95% of that loss was on paper, a non-cash charge reflecting the volatility of the crypto market. For the savvy investor using tools like the Robinhood app or SoFi Invest, these paper losses often represent a buying opportunity rather than a structural failure. Institutional activity tells an even deeper story. Fidelity's FMR LLC holds about a 12% stake in the company, which is a massive vote of confidence for a firm that is essentially challenging the status quo of the asset management industry. We are also seeing smaller players like Interchange Capital Partners initiating multi-million-dollar positions. This isn't just retail hype on StockTwits. This is professional capital betting that the Bitcoin treasury model pioneered by MicroStrategy can be successfully replicated in the financial services sector. The trading volume has been consistently elevated, though it remains below its 20-day average, suggesting that we might be in a consolidation phase before the next major catalyst. What exactly does Strive do when they aren't buying Bitcoin? At its core, the company operates an asset management platform that provides investment advisory services through a suite of ETFs. They've positioned themselves as the pro-capitalism alternative to the mainstream focus on environmental, social, and governance factors. Their flagship products, like the Strive 500 ETF, compete directly with the heavyweights of the industry. While the performance of these funds has been competitive, often tracking or slightly outperforming their benchmarks over the last year, the real differentiator is their proxy voting strategy. They use their shares to push for a singular focus on shareholder value, a stance that has made them both popular with a certain segment of the market and a lightning rod for controversy. The business model shifted significantly following the acquisition of Semler Scientific and the reverse merger with asset entities. This wasn't just about adding more assets under management, it was about acquiring a platform to execute a broader mandate. They've even branched into healthcare through their Clinivalta subsidiary, though they've been clear that the ultimate goal is to monetize these side businesses to fuel more Bitcoin accumulation. It is a circular capital strategy. Run the asset management business to generate fees, use the fees and capital raises to buy Bitcoin, and then use the Bitcoin as a hurdle rate for all future investments. If an investment can't beat the long-term return of Bitcoin, they don't do it. Now, let's look at the tension in the room. The expectation is that Bitcoin stays in its current range, allowing Strive to slowly build its treasury. The reality is that the macroeconomic backdrop is becoming increasingly unstable. With geopolitical tensions in the Middle East affecting oil prices and the broader Nasdaq showing signs of fatigue, risk-on assets like asst are under the microscope. If the Federal Reserve shifts its stance, or if we see a significant pullback in tech giants like Apple stock, the liquidity that has been flowing into speculative plays could dry up overnight. However, Strive has built a bit of a fortress with its capital structure. By issuing perpetual preferred stock, known as SATA, they've raised hundreds of millions of non-dilutive capital to fund their purchases. This is a sophisticated way of raising cash that you don't typically see from a company of this size. If you're watching the tape today, you have to ask yourself, is the market pricing Strive as a financial firm or a tech startup? The price-to-sales ratio is currently sitting at 15.7, which is undeniably high for a traditional asset manager. For comparison, most established firms trade at a fraction of that. But again, the market isn't buying their current revenue. They are buying the future value of the Bitcoin treasury and the potential for Strive to become the primary gateway for investors who want an anti-ESG, pro-crypto portfolio. Comment below how many shares of Strive you are currently holding, or if you think the Bitcoin treasury model is a sustainable way to build a financial institution. Your engagement helps us understand which way the retail sentiment is leaning, especially as we head into the Bitcoin for Business Summit later this month. Looking forward, the catalysts are clear. The upcoming summit in Lake Oswego on May 21st will be a major test for the company's True North brand. If they can convince more CFOs and business owners to adopt their treasury model, it validates Strive's entire existence as a consultant and leader in the space. There is also the constant potential for more institutional buy-in. As the Bitcoin ETFs continue to see inflows, the halo effect often lifts companies with heavy exposure. But the risk is equally sharp. A major correction in the crypto market would lead to another round of massive gap losses, which could spook the more conservative institutional holders. The future outlook for Strive rests on its ability to balance this high-octane treasury strategy with the steady, fee-generating growth of its ETF business. They are currently managing around $2.6 billion in total net assets across their various products, which is a solid foundation, but it's still small compared to the trillions managed by the likes of BlackRock or Vanguard. To bridge that gap, they need to prove that their pro-shareholder activism actually leads to better returns for the average investor using an individual brokerage account. Expectations were that Strive would remain a niche player, a political statement more than a financial powerhouse. The reality we are seeing in the May 2026 data is that they have evolved into a serious, albeit volatile, financial architect. They have leveraged the infrastructure of the modern market, the same systems used by Interactive Brokers and the Fidelity mobile app, to create a new kind of equity. It is a stock that functions like a financial service, but breathes like a digital asset. This duality is its greatest strength and its most significant vulnerability. As the market opens this week, the focus will remain on whether they can maintain this 77% monthly momentum, or if the reality of their high valuation finally catches up with the expectation of their Bitcoin-fueled growth. In summary, Strive is navigating a path that few have dared to take. By merging the world of traditional asset management with the aggressive accumulation of digital assets, they have created a unique vehicle for investors. The contrast between the gap losses and the actual treasury value remains the most misunderstood part of their story. While the public might see a struggling financial firm, the institutional data suggests a company that is successfully building a new kind of balance sheet. Whether you are using Robinhood stock trading or a sophisticated Fidelity trading platform, the volatility of asst cannot be ignored. The tension between the narrative of a risky startup and the reality of a billion-dollar treasury will continue to drive the price action in the coming months. Authority in this market comes from understanding these deeper mechanics, not just watching the daily green and red candles. Strive has positioned itself as a firm that isn't just following the market, it's trying to rewrite the rules of how a company creates value in the digital age. Regardless of where you stand on their philosophy, the execution of their capital strategy has been undeniable, and that alone makes them one of the most important stocks to watch as we move through the middle of 2026. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.